Good morning, guys. It's James Gerrish for another direct from the desk. Well, just when you thought it was calming down before Christmas, we've had a huge number of corporate transactions go on in the last couple of days. A couple this morning, a couple out yesterday. So it is Tuesday morning, the 12th, just around 9:40 a.m. I want to start just by looking at a couple of things we don't normally look at. So TOX Free Solutions, which is a waste management business, they copped a bid yesterday from CleanAway, CWY. So the TOX business is about a $500 million company. CleanAway, you would have seen their trucks out in the street. They're big in waste management, particularly in New South Wales and Victoria. TOX Free are more in the industrial waste, mining waste, etc., up in mining parts of the country. It's a big bid. They're offering 10 times EBITDA, which is a really strong multiple. If you think of TOX Free and CleanAway, they've been buying businesses in the waste management space for about 3 to 6 times, so they're paying a full multiple. But I think that the interesting read through here is not around TOX, not around CleanAway, but more around BIN, which is Bingo Industries. They listed on the ASX not that long ago. They've done particularly well. They're trading at 253 at the moment. This stock has got trades on about 18 times. They're in the recycling space. The recycling space is a really strong growth industry, and these guys are doing it really well. They've got double-digit earnings growth over the next 3 years, and they're trading on about 18 times. So the only issue for us, and the reason why we don't hold this stock, is around liquidity. We can't really get set in any reasonable volume in this stock, but it's certainly one that you should keep on the radar. Some corporate action going on in that area of the market. The other stock that's obviously been under an interesting takeover tussle in the last couple of days is AWWE Limited. There was a Chinese mob that came out and bid for the stock. We've then seen yesterday that Mineral Resources has come and beat that bid. They've offered the equivalent as of yesterday, about 80 cents a share for AWWE. It was about a 7 cent better offer than the Chinese group did. The stock's obviously gone up and trading at 85 cents at the moment, so they're pricing in another further bid coming out of China. The other interesting aspect, and we've had a few questions on this from subscribers, is around the capital raising that's taking place at the moment. You can buy shares if you're a shareholder as of the 14th of November. You can buy shares in AWWE up to $15,000. I doubt that you'll get filled up to $15,000, but it's worth trying anyway. And you can buy shares at 50 cents a share versus the 85 cent trading price at the moment. So clearly that deal makes sense. Out this morning, a couple of transactions are out this morning that are worth casting one's eye over. Transurban, a big deal this morning, coming out and launching a big rights issue at $11.90 a share. They're raising $1.9 billion. So that's the biggest deal from what I can see this year. So they're doing it. They've saved it till last. It's to fund a large expansion of a tunnel down in Melbourne. So they're doing, it's about a 4.8% discount to the theoretical ex-rights price. So basically you can buy stock at a discount to market, but it's a massive deal. It'll sap some buying out of the market. This morning we're negative on Transurban. We've got no interest in Transurban infrastructure stocks. The interesting part of that deal is that they're raising $1.9 billion worth of equity. Their funding gap, well, the project's going to cost them about $5.5 billion. The Victorian government is going to stick in for it for some, but Transurban have got sort of $3.5 to $4 billion worth that they need to fund. So they're going to be taking on debt. And the reason why we don't like Transurban is they've got obviously a lot of debt on their books. They hold infrastructure, etc. And this deal is only going to increase the debt that they carry at a time when interest rates are starting to move higher. We've spoken about it a lot around interest rates going higher globally, and that's probably the main reason why we don't like Transurban at this stage. But this deal obviously increases their debt burden going forward. I want to now turn on to ANZ because this morning they've also announced the sale of their life business, $2.85 billion. I think the key takeaways here is that it's EPS and ROE neutral. So it doesn't really have a massive impact on earnings for this business if they go and launch a buyback with the funds that they're getting out of this life sale. So Zurich is coming in and paying 15.1 times 2017 earnings. It's not a great result for ANZ. ComInsure was sold on around 16 times earnings recently. So the ANZ deal isn't as attractive as ComInsure, but I guess it does a couple of things. It adds to ANZ's capital. It makes it a less complicated, simpler business, and markets and investors tend to pay up for more simple, less complicated businesses. It's another divestment that is happening in the banking space, which obviously has been a trend in recent times. So I think the market will take this favourably. We don't own ANZ. We think it's, it's got its earnings profile is not as attractive as some of the other banks. It trades on 12.2 times, so it's reasonably cheap, but we see better value in the other banks elsewhere. I just want to finish up today by Sun, because they've just pulled the sale of their life business. They were also selling off their life insurance business. They've pulled it as of this morning, which is understandable. This might be a short-term negative on the stock, but I think it's a longer-term positive. Clearly, there's demand globally for these life businesses, probably not at the multiples that they were hoping to achieve. I'm sure ANZ would have liked to sell it for more, because they did take a $520 million hit on the business there, as in a loss from the transaction. But Suncorp has pulled theirs this morning. So short-term negative, but I think that'll be a longer-term positive. It'll allow the market to digest, etc., and a more wide-ranging number of suitors might come out of the woodwork there. So we're long Suncorp. It's one of the best performing stocks across our portfolios, and we continue to like that, targeting $15 in the first instance, where we might trim our holding, but ultimately $16 in Suncorp. So a lot of corporate transactions happening at the moment, where it's heating up into Christmas. We'll continue to keep our fingers on the pulse. I'll talk to you soon. Bye for now.